Are you ready?
Let's get it. Here we go.
It's about to go down. Real Talk with Pasha B.
All right, thank you for tuning into this week's episode of Real Talk with Pasha B. Today's going to be a good one. Sheneka.
Today is going to be a good day.
You want to move your microphone closer to your damn mouth?
It is close to my mouth. How much closer, Pasha, should it be near my mouth without it being in my mouth, Pasha?
Wouldn't be the first thing that has. Anywho.
I'm just
Hey, Sheneka girl.
Hi, Pasha.
How are you?
You know, I'm excited. I'm really excited. Today we have Courtney, our financial expert, here today to talk to us about financial matters, including retirement planning. Courtney, welcome.
Hello, ladies.
Welcome. So let me share this story with you, Courtney, before we begin.
Okay.
She about to tell on herself.
I am.
Tell it all.
I am. So I just want to kind of set the tone.
Okay.
So I consider myself to be one of these individuals who, I think I'm doing what I'm supposed to do. I contribute to my retirement plan that my employer offers. Got a little bit of savings over here.
Okay. What
I can tell you is, although I contribute to, I'm with the federal government, so it's considered the thrift savings plan.
Yeah.
I never really delved into what those numbers how they may look upon retirement.
Great.
So I attended a retirement seminar for federal employees. And when I tell you, this man broke it all the way down with real numbers and showed me potentially what I could be facing upon retirement. And I was like, oh no, that won't support my lifestyle. Now, that was just the retirement, the pension that the federal government offers. That wasn't necessarily the thrift savings plan.
Right.
But just looking at that one little piece, as far as that number, I was like, oh no.
Yeah.
That can't support my lifestyle that I live right now.
Do you know what the most expensive thing in retirement is? Take a guess.
Housing.
Nope. What'd you think?
Health insurance.
Exactly.
Oh.
Health coverage is the most expensive thing in retirement. Because you got to think, right? You're working, you're living, the bills are not going to stop. But let's just say, years ago when you were with a company and you retired, they 9 times out of 10 pay for your health coverage. Mm-hmm. Well, once you terminate yourself, that's cut off. So you have to have some type of health insurance. Now, you can lean on Medicare, Medicaid, Part A, Part B, all the way down to Z, X, and whatever.
But I can't get my braces and my eyeglasses.
You're going to have to pay out of pocket.
Oh, Jesus, Lord.
And so you don't think about that when your company is supplementing most of your insurance. Mm-hmm. They're paying a chunk of it and you're just paying your whatever every month. It's different when it's 100% on you. So that's why healthcare is the most expensive cost in retirement.
So it won't be the $150 I'm paying now.
Hell no.
Oh, no.
It's the $150 plus what the employer was paying.
Exactly.
And you may get it at a discounted rate. But no, it's not that $150. Sorry.
Yeah, that premium could probably be almost $1,000 a month, but you were only paying a fraction of it. But again, a lot of people don't know about that. So yeah, the numbers are scary. And the beauty is that you know the number, right? You can't hide from it.
Yes. So after that, I've been trying to be very, very intentional about how I save money, how I direct my money. Mm-hmm. And I'm going to say this on air. I said it prior to us going live, but I'll say it again. My friends are no good. And don't you tell me that I'm an adult, Courtney, and I'm responsible for myself.
You are.
I have some bad influences around me.
Okay.
So, with that being said, I am... Look at her as she sips her tea. Pasha.
I'm on Courtney's side. Courtney said you're a grown-ass individual.
Whatever. As soon as we finish this podcast, you know what she's going to say? When are we going to go eat? And we're going to go and
you want to root Chris after this?
It depends. We did your game high.
Y'all going to be broke. Working at Walmart, greedy.
Right. 70 years old. We're supposed to be retired. But you know what? To bring a light to that's some people's reality.
Oh, 100%. That is some people's reality. It is.
They've spent a considerable amount of their lives working at a job in which they thought whether it be pension, was going to be something that could, as Sheneka said, be consistent with the lifestyle that they wanted to live after retirement.
Yeah.
They see that it's not. And then you've worked someplace for 40 years and now you're 70-something years old, talking about some thank you for coming to Walmart, when that's probably not the place that you need to be.
Yeah.
So what I would like for you to do is shed some light on, and we have age range of listeners.
Okay.
But I can probably say my experience with retirement, that conversation was not instilled in me at a younger age. So entering probably my last and most recent company that I'm working for, I don't believe that I took advantage, and a lot of people don't take advantage of what the employer sponsored benefits are when it comes to retirement.
Oh yeah.
And I did not maximize that until later on.
Yeah.
So if I'm if I'm a young person, let's say I'm even going to say whether you've graduated from high school and now you're going straight into the workforce, or even if you've graduated college going straight into the workforce, and I'm at a company that offers retirement benefits.
Right.
What are you saying to me, or what should I do?
You should take it. So most people have heard the term 401k, and that's one of the most popular benefits that a company offers, right? A 401k is just a way for you to save your money, and there are some powerful things inside of that, right? So, Pasha, let's just say you take $100 out of your paycheck every week and you go put it in a savings account, right? That money's going to grow, but it's not going to grow like it should. The banks make money off of us, but we don't make much money off of them, right? And so the flip side is when you put money in a 401k, one of the biggest things is that your interest compounds itself. So the money starts to grow its own money, right? One of the other powerful things too is that it's a pre-tax benefit, meaning you don't pay fed or state taxes while you've been contributing. So again, if you make $1,000 a week and you put 10% away, in a traditional sense, and putting that money in a savings account, you're still being taxed on $1,000. In a 401k, you're being taxed on $900. $100 is going straight to your retirement, then you're getting taxed. So Uncle Sam's not seeing that $100, and you compound that week after week, year after year. That's the powerful nature of a 401k. A little bit of money over a long period of time will grow, right? Then some people will say, well, I'm not going to contribute to my company plan because they don't match. If they don't match, so what? The fact that they're offering the plan is a check anyway. Then if they do offer a match, that's even more of an incentive because that's free money.
And explain to us, for everybody who may not know, the match and the benefit of the match.
The benefit of the match is simply, let's say a company is giving a 5% match and you have to give 5%. They're matching 5% of your salary. So look at it as a 5% raise. That's an easy way to look at it. They're giving you free money just to put your own money up. And
so in essence, a match is if you contribute this, we'll contribute that same percentage.
Yep. Pretty much.
Free money.
It's free money. There's no other way to put it, right? So anytime that a company offers that, you take advantage. I run across a lot of people that say, Courtney, you know what? I can't afford to save for retirement. The beauty of it is you're driving the bus. You can save as low as 1% of your salary all the way up to 100%. So you can kind of figure out what's what, right? Start somewhere and then get that feel-good feeling of that snowball rolling down the hill, where at some point that money starts to grow and you get excited, right? But the biggest thing that's in most people's way is themselves. It's moving yourself out of the way and saying, you know what? I can save a little something. You may have to cut back going to get that favorite coffee or going out to eat or whatever. You got to sacrifice now for later because later's going to be here eventually.
Yes. Yeah. And it's funny because I often hear a lot of people say, surprisingly, that I need all my check. I need all my money. And I like that. A little bit over a long, say that again.
You save a little bit of money over a long period of time. That's where you got to start. And you can adjust it at any time. You know, so if you start off to a couple percent here and you get your first paycheck, you're like, ooh, okay, I can't do this. Or you know what, I can handle that. And there are tools out there as well to where you can auto increase it. Like for me, on January 1st of every year, I auto increase my 401k 1%. Just so that I don't have to think about it. And then after a while, I don't notice it. But there are so many tools out there. And to even touch on your first point, a lot of people have never done a retirement calculator. They're all over the internet. You plug in your numbers, your age, what you want to retire, and whatever. You may pass out when you look at it, or you may jump for joy like, okay, I'm on track. But, you know, a lot of people don't do that. They just kind of assume, because retirement is about replacing your current income. If you're used to living off of $65,000 a year, that's all you need to replace. If you're used to living off $100,000, that's what you need to replace. And of course, add the health, coverage on top of that. But that's what it's all about. Everybody's numbers are different, but do something, because it's a crisis in this country.
And just the doing something, that to me is the number one thing, because when I first started contributing actively, I would say in an adult manner to my 401k, it was a conversation that I had with someone, and you're right. So I think I'm a federal employee, and I think our matching is 5%. And it was kind of like, okay, well, even if you, and this was years ago, even if you don't contribute the 5%, contribute something.
Right.
And if even it may not even be a percentage, it may be a dollar amount that you can contribute.
That's correct. Yeah.
Until you get to the point where you're able to contribute higher and higher, and then you should understand the benefits of the increasing your contributions over a period of time, because it's pre-tax. If you get a raise, it wasn't money that you had before.
Yep.
So you can adjust your contribution to match the raise that you may receive.
That's right.
And that's more money that's being invested in your 401k. That over a period of time, like you said, it starts to make sense, and it looks very good in the long run. I like that. Can you go shed some light on, you said about savings.
Right.
So I think the current interest rate on a savings account is?
So there's two types of savings account. You got your brick and mortar. So you got your major banks. I won't say their names. And then you have your online banks. So I used to have a savings account at a brick and mortar.
You about to tell me something.
And the brick and mortar is probably getting less than 0.5%. Online banks now are really able to offer more because their overhead is low. So I opened up an online savings account about 1.5 years ago. My introductory rate was 2.25%. It's gone down to about 1.75, but that's a lot better than 0.5%. Another thing, when you set up a savings account, make it hard to access. You do not want it to where you can easily transfer that money over, because...
So you're the third person to say that.
So my online savings account, if I need to transfer money, it takes at least 2 to 3 business days.
Yes.
So it makes it harder for me to say, all right, Courtney, go ahead and grab that cash over there. You have to make it out of sight, out of mind. And another thing is automate the savings. Just like the 401k and all those other plans are automated, set up a direct deposit or an ACH from your checking account, and have that money come over automatically, so that way it takes away the temptation of, okay, this week I'm going to save my $50. You get that paycheck? Okay, no, I'm going to do it next week. And then next week turns into the week, into the month, into the year, into the whatever. So that's the difference. So online savings accounts are really great because of the higher interest rates. And a lot of them too don't have minimums, because sometimes you say, you know what, I want to open up a savings account, but I don't have $1,000 or $10,000 to do that. A lot of them to where you don't have to have a whole lot of money to open them, just a little bit to get it started. And then there are savings accounts where you need to have a little bit more, where they say you need to maintain a balance. Some of those have higher interest rates because they know you're going to have more money in there. And again, the banks make money off of us. So that's the concept there. But if you do not have access to a retirement plan at your job, but you still work, outside of having a savings account, you can still open up what is called an IRA, an individual retirement account, where essentially you can put a certain amount of money toward your retirement. I believe the limit now is about $6,000 a year or whatever. You can automate that.
Is there a minimum amount you have to contribute?
No. I mean, you just start off opening the account with whatever, but you can go to a ton of online places, some brokerage houses can help you with that, banks, and whatnot. But a lot of people don't know that as well. Like when I meet with a client and they're not ready to move forward with a 401k, I'll say, well, look, at least go open up an IRA and do something, set that up. And then when you get to a point that you want to graduate to a company sponsor plan, do that. because you still want to have access to it. But if you're working and you don't have a 401k, you still have a way to save for your retirement within an IRA.
Mm-hmm. Mm-hmm.
I'm so glad you brought up. I feel like I've been swindled. Known Courtney for years. He's never told me this shit about the savings account versus the brick and mortar and the online.
I didn't know that, but I do have an online savings account.
Okay.
But it's not because of the percentage.
Yeah.
So I need to go and see.
Yeah, you know, man.
Yeah.
I have an entry in my notes.
Yeah,
already.
and off the record, I can tell you which ones are really good because I've done a lot of research on them. I just geek out on this kind of stuff.
Got it. So yeah, the reason I went online was not to have access to it.
Yeah, that's good.
Mm-hmm,
that's good.
Although, you know.
She get it anyway.
I know. I can wait those 2 to 3 days in some cases. But
yeah.
This year, I've been very good.
That's good.
I haven't touched it yet.
That's good.
No, let me take the yet off. I haven't touched it.
Courtney's only February.
No, put that yet back in there.
No, I haven't touched it.
That's good.
Period.
That's good.
Period.
Good.
That's what we're going to say. So let's go back to saving money.
Okay.
Pasha, don't roll your eyes at me. So I know one of the things you mentioned not going to get our favorite coffee. You know, what is it about stuff that people just have to focus on? Why am I getting the middle finger, Pasha? Oh my God.
Because I feel like some of this is directed at me.
Oh, it is. It is.
And
so the accumulation of stuff. So I've spoken
Courtney's
to
not here for the stuff. He's here for the finances.
No, we're going to talk about it. Because I think everyone needs to hear about the stuff.
Okay.
So we say what we can't afford. And I do believe there is a segment of people who struggle with everyday.
Oh, yeah, 100%.
Yeah, with just the everyday stuff, taking care of that.
Right.
But there's also a segment of people who hit Starbucks maybe I shouldn't say it, the coffee place every day, who hit fast food or sit down restaurants every day for lunch instead of packing a sandwich or something like that.
Yeah.
Who need name brand shoes every time they come out.
Know the release dates and everything.
All of that.
Yep.
I
know somebody like that.
You know, I know somebody like that too. You know, who has a whole room just for shoes.
We'll digress.
Yeah. Let me get back on track. My bad. So,
goddamn.
I'm just saying. So, when we sit down and think about it, there are lots of opportunities that we have to save or redirect money into savings accounts, 401ks, and IRAs and things of that nature.
Mm-hmm.
Why do you think we just refuse in general?
I'm gonna answer this question.
Stop.
No. I'm thinking from the person who doesn't have all of the information. I'm going to say that I think a part of it is ignorance, right? Part of it is ignorance. There are ways to do it, but I think because some of the information may not be known, it's very easy to be ignorant when it comes to certain things. So I think, and when I say ignorant, that could be allowing the ignorance to happen. But we live in a society in which we need to be self-gratified, right? Mm-hmm. So yes.
Immediate.
Yeah.
So I know that I like certain things. And a part of me feels as though I should be able.
Yep.
You deserve it.
Oh, yeah.
I should be able to acquire these things that I like.
Right.
However, I'm going to tell you, and I wish this would have happened rather sooner than later, because now the posture is I'm not too far away from retirement in the grand scheme of things. I'm probably like in the middle of my work life.
Yeah.
Okay. So with that being said, so now I'm going into using the calculators. I'm going in there analyzing stuff. And I'm going to be honest with you, Sheneka, because I think I've been feeling bullets whiz by me this whole podcast, right? From you. Pew, pew.
Hey.
That there's no possible way that I can maintain the lifestyle that I currently have if I don't actively change things right away. I'm just being real.
That's an epiphany.
So I get it. And, but I think it was culturally, I don't think culturally, for me, it has always been you work, you save, right? Mm-hmm. And you live within whatever that bubble is. So time has had it, or experience in life has had it, where we're not living the lives of our parents or our grandparents. Mm-hmm. So the way that we currently live is probably a little bit more extravagant than them. Okay, our life experience is a little bit more. That's not an excuse. That just is, my life doesn't mimic my mother's life in which she went to work and she saved, and that was it. My mother ain't travel and go all over these places and have these life experiences. I choose to do so. So with that being said, if I would have taken that advice of working and saving, maybe I would be in a more brighter place when it comes to retirement. If I would have had some information shared with me probably at a younger age, then maybe I would have made different decisions earlier. Yeah. That's all I'm saying.
No, I can dig it. I agree. I mean, consumerism is a huge part of our country. And so we're being fed so much information that it's like, if you don't get that, you kind of feel left out. And I know a huge part of the population feels that way. I got to go get this new phone. I got to go get this new car. I got to go get this new house. I mean, old school people call it keeping up with the Joneses. Mm-hmm. But I mean, it really is consumerism. And you just have to kind of figure out, like, what are you willing to sacrifice, right? Because you could go get that new thing, but we all know what's new becomes old. Mm-hmm. And at some point, it's just, after a while, you can't keep chasing that, unless your lifestyle and your finances can support that. But it is a huge issue. And I just think it took my wife and I years to get to this point, to where we really had to set a plan up in place, because we just didn't want to live that paycheck to paycheck mentality, because so many people are doing it. But a lot of people, if they really sat down, they really wouldn't need to live paycheck to paycheck. It's just cutting some things out and willing to sacrifice now for later, rather than saying, I deserve it, so I'm going to get it. There's a lot of things that we deserve that we don't get, right? And then there's other times where you feel like, I'm just going to do it. I'm working. I've been doing my thing. I grinded hard. I'm going to go get this thing. But if that thing is sacrificing that thing over here, it's an issue. Mm-hmm. Mm-hmm. So you can't ignore that, right? If you've taken, your mortgage payment and you going shopping with it, that's a big issue, right? So there's a lot of people that do that. They just kind of try to piece stuff together because they need to keep up. And then after a while, that can put you in a state of depression, because there's a such thing as financial depression. Like when you get to have so much debt, and that's a whole nother topic that we can spin off on in a second. Like, it can be debilitating. Mm-hmm. You are not financially free if you have debt. Mm-hmm. You cannot be wealthy with debt. Mm-hmm. There's no way that's possible. Mm-hmm. You're always going to owe your light bill, gas bill, whatever. But if you owe you got credit cards and you got student loans, if you owe that kind of stuff, you do not have wealth. Mm-hmm. It's not possible. Mm-hmm. So sacrifice. And you don't have to start big either. A lot of people think, I just got to cut this off. If you are going to that coffee place 3 days a week, cut it down to one. Mm-hmm. You don't want to just put yourself in the exile island. Like, start small and then just kind of gradually get yourself, okay, I wean myself off of this. Or treat yourself too. Like, if you have a goal to say, look, I want to save, this particular next couple of months, I want to save $300. Well, once you save $300, treat yourself, right? Or whatever, kind of, you got to trick yourself mentally to kind of get, we do that all the time. Reward yourself at certain points, but you just got to think about the sacrifice, right? And that's just what it comes down to, in my opinion. Mm-hmm.
And I know what's been helpful for me is redirecting the money so I don't see it. So I have allotment set out. So the money comes out of my paycheck before my paycheck hits my account. Good. And that way I know whatever's in my account, I know to now adjust to that. Yeah. Because the money has already been redirected. So in some cases, you have to trick yourself. Yeah. And just reduce what you have access to in the immediate.
Oh, yeah.
I want to go back to something you said, Courtney, in regards to retirement, basically preparing you to continue to live within whatever your certain financial parameters are. Right. So let's put certain things in. Well, if you don't prepare yourself correctly, because I believe, and correct me if I'm wrong, when you actually retire, you shouldn't have certain debt, such as you shouldn't still have a mortgage. Right. You shouldn't still have student loans that you're paying for. Right. So realistically,
children, daycare, things of that nature.
Right. You shouldn't still have
unless you adopt it at a later age. That's a possibility. But that's not really that's different than, but go ahead, my bad.
No. So with that being said, someone making $65,000, right? And that $65,000 a year is maintaining their lifestyle while they're working. And when they're not working, if they still have those same debts and now they're going to be additional expenses,
they can't stop working.
They can't stop working.
There is no retirement.
Right. So you then tell me, what can someone do to prepare them for retirement? What can I do to start that retirement ball going? Not to start it because it's going,
right?
But what should I slowly be making sure that I have completed before it's time for me to retire and I'm in a better financial place so I don't have to worry about this.
Right. So obviously you have to take a look at number one. Can you retire, right? Have you started saving money? Like that's checkbox number one. If you haven't started saving any money, you can't. You're going to be working until you pass away. And then whatever debts you have, unfortunately, are passed on to whoever else is in your family or whoever may take care of that if you don't have those things set up. So I think it kind of starts there. And then some other things that you need to have in place are a will and a trust, right? So a lot of people say, well, I don't have a lot of possessions, so I don't need a will. Or I don't need a trust. And I'm going to read you what a will is. A will is a legally enforceable document stating how you want your affairs handled and assets distributed after you die. It's an important component of estate planning. It doesn't matter how much you have. Those are just things that you want to have in place. Because we all know when someone dies, Uncle JoJo goes crazy.
Yep. Everybody
come out the woodworks. Well, he said I could have the TV. He said I could have this. So that's a part of it too, is just having that stuff in place so it doesn't burden the family and they can properly grieve, right? Now we go to a trust. A trust is a fiduciary relationship in which you give another party authority to handle your assets for the benefit of a third party or your beneficiaries. So for one, you have it to where the will is allowing the people to get the stuff. Now it's all about the authority to handle any assets that you have. Again, it doesn't matter how much you have. Those are some basic things that you can have in place. Most companies, if you work for, have like a third-party service you could probably get a will from for very little money. Or if you go directly to a lawyer, you could probably pay $200-$300 and get a will.
Legal Shields. I don't mean to advertise them, but I do pay for their service for just to have that ability to have some type of avenue to go to if I need legal advice. But I know that they offer it. Legal Shield, this is not an ad. I'm just saying, holla at your girl if you want it to be.
Hello. But yeah, that's, those are some things that you can have. But I mean, you got to start with some savings too. And then you got to also look at your household, right? Take a look at your budget, right? Look at what's going out versus what's coming in, right? What can you cut out? I would say some of the big expenses, especially if you have a house, is one of the big things you could do is refinance. And my wife and I just went through that about a couple months ago, where we cut our interest rate from 5.25% to 3.2%, which is saving us $400 a month. That $400 a month, it's not extra money to us. We're still applying that to something else, so it doesn't look like it's extra. So that's how you can try to get around to doing that. But one of the biggest things about that too is your credit.
I was going to say, how important is that?
Oh, it's so important. It's so important. And people think that credit cards are the devil. They're not. Like, it's how you manage it, right? It can be a really good tool if you manage it right. But there's so many people that get into the credit card debt and they never get out of it. And paying that minimum balance can just be a nightmare. You end up paying so much more. So you have to take a look at all those things, right? And come up with a plan on what you want to tackle first, so that way that you can retire. Because again, if you are still working and you've got $30,000, $40,000 in credit card debt and you still have a mortgage, you can't. There's no way possible. You either make more money to make up the difference, but sometimes people make more and still spend the same or even more. If you can't be a ruler over a little, how can you be a ruler over many? So you gotta take a look at that and really just figure out what's important.
Absolutely. And what I see a lot of, I shouldn't even say a lot, some of the avenues in which people are taking now and, halfway through their career, they're considering downsizing.
Yeah,
So
that's a good one too.
So I will tell you, Courtney. So I think I fell into this whole American dream thing as far as, get the house, get the cars and all of that stuff.
Don't forget about the white picket fence and 2 dogs.
I don't like animals.
Okay.
But now that I have the house, I really don't need it, And I'm considering downsizing. But now that I'm considering downsizing, it's like, the amount of money I'm paying for this house, and if I go somewhere else, I'm going to be paying the same amount of money, I know I need to do some more research, but I just think just not getting caught up in what you said, keeping up with the Joneses or certain expectations that we think society has. I think if you take a look around, there are plenty of people who look like us.
Yeah.
Where do you need a 5-bedroom house? Do we really need a 4 or 5-bedroom house? Do we need the luxury vehicle?
Yep, we do.
Do we need all the cable channels? Paying $200 a month?
Yeah.
So these are different ways in which we could potentially
no, you are 100%
free
right.
up money. So when I went to this retirement seminar, he did speak specifically of reducing expenses.
Yeah.
So do that now.
Yeah.
As far as getting your credit together, freeing up money so you can pay down these expenses just in general, because you want to have a good quality of life.
Right.
Not only now, but when you retire.
Right. 100%.
So the whole reducing expenses, that's where I am right now,
That's
Courtney.
good. No, that's good. That's really good.
Stop. I just want to throw something at Pasha right now. Reducing expenses while trying to maintain a quality of life, because I do enjoy eating out. I do enjoy traveling.
Courtney, she tried to blame it on
No, it's just the amount of times, Pasha. We don't have to go out every time.
Right.
And you're not the only one. I can throw some other people on the bus too.
Sheneka be in these streets more than I be in these streets. Okay. So half of her expenditures come from her.
Okay.
It comes from food and entertainment.
Okay.
I can tell you that's the bulk of my expenditures.
Okay.
Food and entertainment.
But I think you can still have, you have, I'm going to say the B word.
Budget.
The budget.
Yeah.
Right?
What's wrong with the budget?
Oh,
I love that word.
Her. So, Courtney, I sat down and I wrote down where my money was coming. I pulled my bank statements and it hurt my heart. It hurt so bad.
Yeah.
Once I saw that number of how much is going toward food and entertainment.
Yeah.
So I called Liz Health over here. Pasha, you have to do it. Like, just pull your bank statements. This was last year. She refuses.
Have you done it?
She refuses to do it.
Denial.
But it's helpful when you see the numbers. It's very...
At least she's honest.
It's very helpful. I'm going back to to know better is to do better. And once you write it down, it's facts,
That's right.
So I am in denial.
Okay.
I know that I am wasteful.
Okay.
Now, there are certain things that, like, I don't have cable. I don't see the need for cable.
Okay.
My car is paid off. I don't see a need to go buy a new car.
Right.
There are certain things that I'm just like, I don't need. So, but there are certain things that I like to indulge in. So with that being said, if I was to take my bank statements, I'm fearful, really, truly fearful of to actually see the amount of money that I waste, knowing that if I put myself on a budget, and that's the budget is the scary word, because the budget to me in my head is processed of what I can't do instead of what I can do within reason.
Mm-hmm.
So I know it's something that I need to do, but these J's about to drop.
Oh, there it is. She has revealed herself, ladies and gentlemen.
I'm just saying, it's the shoes. So I understand. I am one. This is what Pasha will not be. Pasha will not sit here in your faces. See the hand? I will not sit here in your faces and tell you a lie. I need to get my life in order when it comes to my finances, because there are so many little things that I could be doing.
Right.
I'm the takeaway, one of them, I know we're not even at the end of this podcast anywhere near, but one of the takeaways, and this is why it was like a ping, moving money and not making it accessible. Mm-hmm. So all my savings accounts are linked to all my checking accounts, and they're at brick and mortar banks.
Make them totally separate institutions.
And I've seen the online savings accounts, and I'm kind of like, you know what? I'm going to probably say this. I thought the online savings accounts were for people who just couldn't. It was, I'm not going to sit here. I'm not lying to you people. I'm not going to lie to you. But shedding the light.
Say it. You thought it was for people like
I'm not going to do that. I'm not going to do that. You will not get this recorded. But knowing the fact that the interest rate, because again, in my head, it was like, well, why put money in a savings account that's just like 0.5% interest? Like, it really is what it is. And yeah, I put my money in my savings account, don't get me wrong, but I'm not as intentional as I should be.
Right.
Right? But now you're telling me I can go to an online institution where I do not have access to this account. I'm going to get a better interest rate.
Yep.
And there's no minimum, no maximum. I can find some with affordable minimum and maximum. Now, really, why wouldn't I do it?
Right.
And I can, not have the SB Starbucks every day.
So let me ask you ladies this. Do you know what an emergency account is?
Isn't the emergency account where you should have 3 months?
Come on now.
See, I know some shit. I just don't do some shit.
That's right.
3 months.
3 to 6 months based upon.
So is that the same as a savings account,
yes.
Courtney?
Yes.
Specifically for?
Yes, emergencies.
So
you could have cash sitting in your checking account, right? So after all your bills are paid and everything, and you put money in your savings account, it's still okay to have that money, some money sitting in your checking account for whatever other expenditures that you have to have. But you want that emergency account to have that money in there. So that's what the savings account is for, because in emergencies for some people happen more than others, but that's why you want it in an account where it's going to get a little bit of interest, because that money is going to grow over time, right?
So let me ask you this real quick. So should one have an emergency fund and a savings account, or is the savings account the emergency fund?
Both.
Okay.
Yeah. I mean, well, I'm not going to say both. They're interchangeable. Yeah, okay. They're interchangeable. Yeah. Yeah. They're interchangeable. Yeah, there are. So that's that. Well, yeah, it's 3 to 6 months, and it's really based upon how volatile is your job, how safe is your job, right? So certain industries, if you know that it's easily for you to get fired or laid off, you probably need to have about 6 months. But if you're in a pretty stable job, 3 months is good, because if you get chopped tomorrow, what's going to happen? Are you going to have to lean on that credit card? Are you going to have to call family and friends? Or are you going to have 3 months of savings in there so that way you're quote unquote comfortable, but still looking for employment? Or let's just say you want to chop that job and start a business, right? We haven't even got on that. That's another way to have a nice retirement and starting a business. If you want to do that, you have that money in the bank. You want to have some of that liquid, available.
Yeah. And I want to say, in reference to the emergency account, I think a lot of people experienced that last year during the government shutdown. Like
a great point.
To go a whole month missing 2 paychecks.
Yeah.
I think it became very, very evident to a lot of people that, okay, I have to do something different.
Yeah.
Because even outside of the government shutdown, I think most Americans don't have $400 in savings.
If most people's car broke down, they wouldn't be able to afford to get like a new starter or a carburetor or something, which is crazy.
Yes.
You're right. You're right. They're having to lean on a credit card or borrow money from a family member or whatever, or take out a small, or go to, let's not talk about predatory lending with payday loans and stuff like that. Most people will lean on that because they don't, they haven't either been exposed or they don't understand other options of having to save that money in like an emergency savings account.
And I'm glad that you brought that up. Not saying that the retirement plan is used for this, but because and I can speak specifically for the federal government, you can actually take a loan if something happens.
Yeah.
You should be able to take a loan against your money that you have saved, which is usually at a lower interest rate,
low interest rate,
than if you were to go the route of going to a brick and mortar or getting a loan from any other type
that you may not even get it
qualified for because of your credit.
Because of your credit, right. Or if they do, your interest rate's like 25%, and then you're just, if your back's against the wall, you're probably going to say yes and think about it later. And next thing you know, now you're in debt again, you know. And 401ks do have loan options in them as well. You just got to be very careful with that because you don't want to mortgage your retirement for a loan. But life does happen. But that's where an emergency account will come in to help with life happening. Yeah.
Absolutely.
Yeah.
Absolutely.
Yeah, for sure. What is wealth to you ladies?
Damn.
I've never been asked.
Me either. Damn, Courtney, what is wealth?
So I'm going to read you on what I found what the definition of wealth is. There's a big difference between having money and building wealth. Money comes and goes, but wealth encompasses things like savings, investments, retirement, property, or owning your own business. Wealth is a set of resources that give you options and let you take advantage of opportunities in life. That's wealth.
So it sounds like wealth is when your money makes money.
There we go.
That's what I heard.
That's
different streams.
Different streams, right? Yep. It's a set of resources.
Yeah. So it's not just having money. It's when your money makes the money.
That's right. That's wealth. Yep. That's right. Yep.
So just to touch briefly on like even individual investments, so like stocks and bonds and things of that nature. I started to dip and dabble into stocks a couple of years ago.
Okay.
With the help of some of my coworkers, they explained it to me. I'm going to say from a novice perspective. It is something that you need to do your research on and to know kind of what you're delving into. But I think if you have the available extra income and you've done your research, I think it is another stream of where you can end, because stocks and bonds used to be so used to look so different, where you would have to have a broker and all this stuff to even try to get into the investment arena. You don't need it. Nope. Half of this stuff is handled online.
That's right.
You can choose whatever stock it is that you want to invest in based upon how much you want to spend. You can buy and sell at will. You will need to understand the process of, let's say, how it's reported, the implications, whether it be good and or bad in regards to taxes. But I think it's something beneficial and more of us need to start dabbling in as another stream of making money.
Yeah, so we can dive into that. So essentially what you want to have, when you want to have a really diversified portfolio, you want to have the emergency account, you want to have a taxable account, which is like opening up a brokerage account, like going directly to the market. Then you also want to have a pre-tax account like a 401k. So you want to be able to have those things. And then you can add real estate into that bucket as well, because you want to have those different avenues, because if one's not doing so great, you have something else kind of holding it up. So that's a way to really have a balanced portfolio. And like you said, you can go online and open up these accounts, and the way it's so inexpensive now to trade. They've made it very, very inexpensive to do that nowadays. So if you do have that, you just understand the implications. And one of the implications of a taxable account, having that is called capital gains, right? So let's just say, Sheneka, you go buy Apple stock right now and it's $350 a share, right? And let's just say you buy one share and it jumps up to $500. You have to pay the taxes between what you bought it at and what you sell it at. And that's called capital gains. So understanding that, like, okay, that's a good thing that it's growing, but you have to pay the taxes on it. But at the same time, when you have those types of accounts, you need to make sure that you have the right amount of money available to offset that. If you live in paycheck to paycheck, but you buy an Apple stock, that's probably not a good idea.
You shouldn't have $300 to be buying Apple. No, I'm just playing.
But just things like that. But that's a real way to have like a nice diversified, way of doing it, because you don't want all your money in a pre-tax account, because when you reach 59 and a half in the company sponsored plans, that's when you can start to pull that money out without a penalty. But then you pay taxes on that money when you pull it out. So all these years it's been growing tax-free. And the cool thing about those plans is you don't pay the capital gains tax. You just pay taxes on what you pull out. So the rule of thumb would be, hopefully when I'm in retirement and I pull that money out, that's my only source of income. So I should be at a lower tax bracket, right? That's how that would work. And then if you have some taxable account, now you're balancing it out because you paid the taxes on that stuff all throughout the years. Because if you're in retirement and got $1 million and it's been all in pre-tax, you don't have $1 million. You have $1 million less, whatever your tax bracket is. So diversifying is so very important. And then not to mention doing real estate and all those transactions of selling those properties, because there's a difference between flipping houses and then holding on to real estate a certain amount of time. There's gains on that you have to pay. Another good reason when you're in retirement or even throughout your years is at some point lean on a trusted consultant, right? There's only so much that you can do on your own. It's nothing wrong with consulting a financial professional. Years ago, they were called stockbrokers. Now they're like financial advisors. And the way the industry is now, it's friendlier, because before people would just think, man, there's the sleaziest people on earth. Like they're going to put me in this investment. And there are certain investments they can put you in. But nowadays, the key would be to find an advisor that is fee only, which means that you know exactly what you pay them, no matter how much money you make. So that's something that's been in the industry for about 5 or 6 years. That is really game changing, because for the average investor that doesn't know, if I know I'm paying Pasha $1,000 a year to manage my finances, but my portfolio's grown 500%, you're not making money on my money. You're just making money to help me. And so it's okay to lean on somebody like that. There are so many individuals that can help you streamline your retirement, help you with a will, a trust, and all that. So that way all the pressure is not on you to do all that stuff. And then you build a relationship, and that individual can help you throughout your life with your life insurance. And that's another thing we didn't talk about. Having life insurance is so vital as well. Takes the burden away of having to pay for little Johnny's funeral, trying to get everybody together to do a fish fry.
Car wash, fish fry.
And I think off air, we talked about the life insurance also being a caveat to the building wealth.
Yeah.
And people don't necessarily look at it that way. And it may not be building wealth for you, but it's building generational
Right,
wealth.
Exactly. Yeah. Having those policies in place now, getting like a term policy or whatever, a 20-year term or 30-year term. And the younger you get them, the less expensive they are. Paying that little bit of money is going to set your family up or whatever to pay off any debts that you may have or whatever to do that. So, those are all things that you could use in a nutshell to just get you ready for retirement. And a lot of people don't like to think about the life insurance because, it's a scary thing to think about death, but it's going to happen. So why not plan for it knowing that it's going to happen? Yeah.
So with that being said, when you start talking about generational wealth, how would you suggest one begin the conversation with their children? Because it makes no sense to have all of these policies set up in place when your children don't understand the benefits of it, and they go out and buy a brand new Cadillac with 26-inch rims and, things of that nature. They squander the money.
Right.
So how can parents or people with children help share information? What types of information should one be sharing with their children as far as what money is and savings and the importance of preparing as early as possible?
So one of the things that we do in my house, and I have a 10-year-old son that my wife and I have, is I remember when I was growing up, like my parents never talked about money. Like anytime that we would go somewhere and they would buy something, they would always tell me to go sit down. And I would actually kind of want to understand what's going on, but they would never tell me this is grown folks' business. How many times have you heard that? Well, a lot of times as you get older, there's no education there. Then you get your first job and then you're taught to spend. So I think the conversation first starts with what money. So like my son, he'll ask me how much my paycheck is, and I'll tell him. Mm-hmm. And I'll say, this is how much it costs for us to run this house. Now the numbers are gigantic to him because he's like, oh my God, it costs $65 for this bill or that bill. But we're planting the seeds for him to understand that, just because you make the money, some money has to go out. So I think it kind of starts there. And depending on how intelligent your child is or how much you understand, you could start as young as 8 or 9 years old to just kind of say, hey, here's how much I make. Here's how much it costs. And as they get older, they'll understand. We've set up a savings account for him too at a young age to just kind of let him know, hey, we're putting this amount of money into it or whatever. Again, he may not fully get it, but as they get older, they'll understand what's going on. And then at that point, once they get their first job, set them up with their own savings account. Make them save money when they get their first job. That's a good way to do it. If your son's making a couple $100 at whatever fast food chain, make them put 10% of that away. Mm-hmm. He may squander over like, oh my God, I need all that money. But you're creating a habit so early that it's going to be second nature. And then let them know about whatever life insurance you have. Mm-hmm. Look, this is what we have. Unfortunately, I'm going to pass away. But the burden's going to be a little easier on
folks and
on
kids
you.
Are trying to knock them off, Courtney. It's like, I don't know if I want to let them know how much it got on me now.
I don't know why we so scared to share stuff with our children, though. Like,
let me tell you something. Kids are killing their parents for not enough money to be killing somebody for. I think there was something, saw an article, I'm not sure if it was Chicago, but this upcoming rapper killed his mother for, I think, a $90,000 life insurance policy.
Really?
I saw that. Killed his mother. And I think he was an only child. Mother was self-employed. I believe she was a beautician, hairstylist, been in the business for years. And based upon what I've seen, always made sure that her son had. Okay?
Yeah.
He killed his mother for $90,000. Real talk, that's a year's worth of salary for some people.
Wow.
You killed your mother for what you could potentially make in a year. That's not worth it.
No.
So I think if a kid is going to kill you, they're going to kill you for $5,000.
Right.
You know what I'm saying? If that's what it is.
Right.
But Courtney, I think you said something important. So what I try, and it's not going to work at everybody, but the exposure of your children to income versus expenses. Mm-hmm. So I try to expose my daughter to, okay, I'm going to make you responsible for paying this bill.
That's a good idea.
And not that you had to pay it yourself. So the light bill is due this date every month.
Right.
It's your responsibility to ensure that you remind me that the light bill is due, and then come and get my banking account information
right.
so you can go and sit and pay the light bill.
Yeah.
Because if I walk into this house and don't have any lights,
right,
it's on you. Mm-hmm. You got one job.
Yep.
Now, I'm not saying to leave that job, without supervision. What I'm saying, though, is that is at least allowing her to see how the light bill fluctuates.
Right.
I think you should also not be scared to share your how much you make with your children.
Yeah.
And realistically, and even if you're not even giving them the right figures, if you want to hide some things, let's say you tell them, this is how much money I make. Write it down. Show them the bills. These are the bills that come into this house. Through your addition and your subtraction, we're going to do this.
Right.
Okay. So when we get to after we've made our money, we've paid our bills, and we got this at the end, and you coming to me talking about something, you want to do what?
Right.
This is really what life is. And this is life based upon me making X amount of money.
Right.
So also now, if I was making less,
how that would look.
Right.
Exposing, I think that's the only way that we could potentially build those or instill those values in that life experience. But also, Courtney said something very important. So with the life insurance, you can set your will up and set trust up that your kids don't get all the money
you can.
when you die.
Till they get a certain age, or you can get them a percentage or whatever. Yeah, exactly. You
and
can
piecemeal
do that.
it. So they can't go out and buy that 2022 Cadillac on your death money.
Right.
No. How about you get
everybody VIP? Come on, meet me at the
we
club.
popping bottles.
Yeah, and it probably should be something that you're giving them that should still require that they actively engage in their own life. So I'm not going to give you enough money where you should think that you can sit down and live off of, because if you look at it over a period of time, this is supposed to supplement you for an extended period of time. You're not getting all this. My children ain't getting all my dead money at one time.
And it's so funny. I went to an event. It was a youth event, and there was a portion where they were teaching them about financial literacy, and these were high school students, and questions were asked of them as far as how much they thought things cost. So it was a virtual experience.
Yeah, it's eye-opening. I'm sure it was.
Yeah. So the guy was like, okay, so where do you want to live? And, they wrote out what their virtual life would look like. And then he asked them, so how much does this apartment cost? How much do you think an apartment costs? $300? Like $400? And the adults in the room were just astounded. How much you think cable costs? How much you think putting gas in the car costs? Insurance. Like, we haven't even talked about insurance. Like, they have no clue. So I really love what both of you have said as far as just exposing children to what that looks like, because they have no clue. And in some cases, they can't even conceptualize.
No, they can't. The numbers look so large to them where they just don't know. I really wish that they did that in the school system. I wish there was a class on finance like in elementary school, just teaching kids. I mean, they've done a few things where they teach you how to count money, but that's different, counting money versus understanding money. So it's really up us to the parents to educate our children on that, because if you haven't talked to them about money, and as soon as they hit that college campus, if they go, there's going to be that person standing outside. Yep. You get this free t-shirt. You get a free t-shirt. They sign up for the credit card, and boom, that's how I started. Because that's how I got my first credit card. Literally on campus, excited, got a credit card, went straight to the mall, went to Lennox, balled out, maxed it out the same day.
Wow.
Oh yeah. I've been there. The
same day?
The same day.
That was my life.
The same day.
And it's, let me be a little transparent here, Courtney. So that was my experience as well. So when I was in college, I think I had 3 or 4 credit cards, maxed them out. You can call them and say, hey, can you increase my limit? They'll increase your limit. I'm in college, right? I don't have a real job. And going through that process in my early 20s after I graduated of cleaning my credit. Like, it's real easy
to mess it up.
Yep. But going through the process of cleaning it up, and so much time and money was wasted.
That's right.
And just having that conversation of just how important maintaining good credit is.
Yeah.
So, and I'll tell you, and this is back when the credit was, shaky. I remember needing a car because I immediately wrecked my car when I moved to Atlanta. Immediately wrecked my car. And I had to go purchase a new car, and I was quoted like an 18% interest rate. I was like, I know my credit bad, but is that bad? This was like 18 years ago, y'all. I'm good now. But I called my credit union at the time, and I was like, let's see what they're talking about. Called the credit union, and they quoted me a rate that was half that amount. So I think even with that, knowing resources that are available, some people think because I walk on this car lot, I have to pay what they're offering. Call your bank first of all.
Get pre-qualified.
Get pre-qualified before you go, and don't allow people to kind of swindle you into thinking that you only have this option that's available.
100%, yeah. But it all starts with having that education as a youth, and then at some point you may not think they listening, but it'll kick in at some point, and then you can just have those conversations like, okay, they'll thank you so much for having that conversation and teaching them that stuff. But I think that's a good way to start as
and another thing that came to my mind as far as redirecting money, something I did this last year. Every once in a while, take a look at your credit cards, take a look at your insurance. Because what I noticed is over time, even with your cable, because I think the cable companies do this mostly, they give you like an introductory rate. And then over time,
that thing will rise.
The rate increases.
Yeah, and you don't notice it.
They'll opt you into certain things. And I noticed that with my car insurance. Like, why is my car insurance going up? So I called them and I'm like, look, why is my car insurance going up? Talking through the process. Oh, if you take this defensive driving class, you can get this, which I did online. Another thing, they said they opted me into some program and it was up to me to opt out of it.
Oh, yeah.
Really? Yep. Come on now. No, we're going to get rid of all of that.
Yeah.
So just by calling them, I was able to reduce my car insurance by $30 a month.
Yeah.
Just from things they're just adding to. So, again, just kind of taking a look at what you have going on and shop around.
Yeah. It's called being an active consumer.
Yeah.
So you mentioned something about credit card debt, and Courtney, you are with the refinancing. So, understanding that there could be a better option out there, whether that be if you have a credit card, potentially moving balances over to a lower interest credit card, using that extra money that you would normally pay to put into your savings. Yes. Refinancing can also free up money. And
snowballing.
Yeah,
I think you mentioned that earlier. Yeah. So once you pay off one credit card,
you apply that same money to the next one.
To the next one, till that one's paid down.
That's exactly what we do.
Let me tell you what I've heard as we wrap up, right? So one of my takeaways that I'm getting, and I'm so glad we had this podcast, was the diversifying your portfolio. And for the average Joe, it may not be a difficult thing to do, or it's not as difficult as we probably think it is. So making sure that we have money in a savings account that's making the best interest that we can possibly have. Investing and opening up in your IRA, and also with some type of retirement plan. If you can dip and dabble in additional stocks and things of that nature. We did not necessarily touch too much on the aspect of rental property, but if you can do that, that seems to me to be at least 4 or 5 streams of resources, financial resources that you could potentially have. I don't think that people understand how important it is to kind of have your money all over the place and trying to make the best value or resources of that money, because we get stuck in thinking that we have our checking and our savings account. Right. And that's all. And the interest that you're getting on any checking account, if you have one, isn't it lower than the savings account? It's low
unless you go to a place where you keep a very high balance. Yeah, then they will. But most of the time, you're not getting much at all.
And that online savings account. I don't know. That's just that one right there, Courtney. That's a good one.
It is.
That's a good one. You know, I'm going to go around telling people. No, seriously.
I knew something Pasha didn't.
No. You just said
thought it was for people.
No.
Earth, you elitist.
No. What I thought, it just seems like the brick and mortar, or they make it more advantageous to use it because you already have the relationship built, versus the alternative of, okay, this online source is having a savings account, and you'll see sometimes that the interest rate is higher than your brick and mortar, but you're thinking about what's the catch.
Yeah.
And not even looking or reading the fine print to say, technically there isn't a catch. And then some of these online institutions you already may have some type of relationship with, whether you already have a loan with them or something like that. So taking advantage of that.
Yep.
I got some takeaways.
Good.
Yeah, you made a good point. Yeah.
Well, I'm still an elitist.
No. I just thought about something you just said that I also did. People you already have a relationship with, kind of consolidating your business with them in order to get discounts as well.
Yeah, being the active consumer, if it's the best for you.
Right.
Yes. Credit unions are awesome.
Yeah, that's who I only do credit unions. I don't do the traditional bank. Credit unions, they're so good because a lot of the bank accounts now, they charge you just to have your money in there. And I think that's just crazy. I've seen some places where they charge you to go in the bank and do a transaction. I've literally seen bank accounts set up that way where they charge you $3 or $4 to go in and
if you have a transaction with the teller.
With the teller, yep. Oh. It's come to that.
So why not use the online sources?
Why not use an online source? That's right. Yeah.
All right.
This was fun.
This was awesome.
I'm glad you all learned something.
I have so much more.
She always has so much more.
I do.
Courtney, you have any additional points to leave us with?
I would just say, think about your future, even though you're in the present. That's just start there. And you don't have to do it all at once. Take the baby steps when you're thinking about your retirement and all the other things that you want to do, and just write some things down. And don't be afraid to talk to someone about it. Once you whether that's an advisor or someone, meet the person, vet them out. Yeah, don't be afraid to get help, because we can't do it all on our own. I lean on a lot of people, and I listen to a lot of different streams of whether that's different podcasts or whatever. I self-educate myself too, on top of me doing this for a living. And then don't be afraid to tell somebody else about what's going on too. Mm-hmm. Don't be afraid to share. Man, I learned about this online savings account. Or, man, do you have a will? Do you have a trust? Who your life insurance with? Just kind of ask. And that's not to try to belittle somebody, but just kind of spark that conversation with whoever's in your circle. You'd be surprised what you hear.
Mm-hmm.
Love it.
Courtney, thank you for joining us today.
Thank you for the invite. I would love to come back in the future and do a part 2.
You'll get the invitation.
Cool.
All right. Thanks again for tuning in to this week's episode. And until next time, peace.
This is Real Talk with Pasha B.